Every day feels the same right now. Red candles, weak bounces, and more questions than answers. It's frustrating to watch, especially when the bigger picture looks like it should start turning bullish, and the Fed's announcement yesterday through Jerome Powell was bullish or dovish on the surface, but was cut with an undertone of don't get too excited. That is what we're getting into in today's video. And we're also going to talk about something fundamental that is stalling the market right now that hasn't happened yet. It's small, it's subtle, and it's running through every part of the system. I'm not talking about a quick bounce or some short-term price level. I'm talking about a deeper structural change, like a switch, literally a light switch, the kind that decides when this entire market turns. So that's exactly what we're also going to get into in today's video, so you understand what will happen once these triggers go off. All right, getting started. Something huge, something big just moved. You wouldn't know it from the charts or even the headlines, but underneath the surface, the entire financial rhythm just changed. The Federal Reserve confirmed it will stop shrinking its balance sheet on December 1st. They called it risk management. And yes, they said there's still uncertainty about the next rate cut in December, but that language, you have to remember, is a distraction. And I believe in many ways could have been strategic. What matters and what we have to focus on is the action, because what actually happened is, for the first time in 2 years, the Fed is preparing to add liquidity back into the system. The money that's been sitting locked inside of the Treasury and banking system is about to start flowing again. And when liquidity shifts direction, everything follows. Risk assets, yields, corporate capital, and even Bitcoin. It's the kind of turn that never gets announced with a headline. No, you only see it later. You see the actions of it as a consequence when prices start reflecting what policy already set in motion. And that's the point we've just crossed. So you might be wondering, if this was so bullish, why isn't the market moving higher yet? In a minute, I'll show you something specific to Bitcoin that's making price action look like it's stuck, and why that's exactly what happens right before the next major move. So just hang tight. Let's talk about the liquidity clock that is turning back on. Markets don't move. We have to remember, the second the switch flips, there's a lag, there's a delay. It's the calm before the reaction. And right now, that lag is exactly what we're seeing on Bitcoin's chart. So don't be surprised and don't despair. Liquidity in the US financial system moves like a tide. It flows in, it pulls out, and for the past year, it's been in retreat. The Treasury's cash pile, the TGA, has climbed close to $1 trillion, draining money out of the market. Banks have parked hundreds of billions in the Fed's reverse repo facility. So it's as if all the water got pulled off the shore before the next wave comes in. Ebb and flow. That's why Bitcoin looks like it's pinned in place. It's not a lack of demand. It's timing. Right now, we're sitting at the tightest point of liquidity of the entire cycle. And when that reverses, capital doesn't trickle back in. It floods back in. So as soon as the government reopens and spending resumes, that cash starts moving. Then on December 1st, the Fed officially stops quantitative tightening. So this will be the moment the liquidity clock flips from contraction to expansion. And Bitcoin is the first asset class to feel it. This is the same setup we saw before every major parabolic move. Late 2016, mid 2020, and early 2023. Flat price, silent sentiment, and then a sudden ignition moment once liquidity returned. So the question isn't whether Bitcoin is ready. It's whether you're watching the right signal and not getting distracted by temporary price moves or media headlines. You have to be longer sighted than that, or you just won't make it. So while the Fed's been shifting direction at home, something even bigger happened abroad. The world's second liquidity engine, China, just moved. too. In Busan, South Korea, Trump and Xi sat down for nearly 2 hours and came out with a trade framework. The US will cut its tariffs on Chinese goods from the 57% down to 47% and will specifically reduce the fentanyl-related tariff from 20 down to 10%. China agreed to resume large soybean purchases and committed to rare earth exports, which is a big deal. Many believe everything was actually contingent upon this. And then they went as far as suspending certain export controls for a year. China Briefing Plus One Bloomberg Economics says this agreement lowers inflation risk and stabilizes supply chains. Exactly what the Fed needs to keep cutting and exactly what the world needed, honestly. So it's not just a trade truce. It's a global liquidity thaw. Two of the world's biggest levers, the US monetary policy and the US-China trade dynamic, just shifted from restrictive to expansionary in the same week. So you have to see the bigger picture. So yes, the Fed has turned dovish. Liquidity is coming and the global picture is warming up, but the market isn't reaching it yet because it's waiting on confirmation. It needs certain actions to happen, even though they've been announced already. And that confirmation usually shows up in two places: yields and the dollar. Right now, the US dollar index is sitting near 98 to 99, and analysts are watching it closely. If the dollar starts pushing back above 100, that's a warning sign. Be aware. It means global capital is moving into defense mode again. And every time we've seen this kind of a bounce, Bitcoin has cooled off right after. Decrypt actually reported that a move from DXY, or the dollar index, from 98 to 105 or 108 has lined up historically with 15 to 25% pullbacks in Bitcoin during past cycles. So be aware once again. So while the Fed may sound dovish and the China deal looks bullish, markets still need these signals to flip. And that's what's going on right now. If the dollar breaks higher, we probably get one more round of volatility before the real move starts. If the dollar, however, stalls and rolls back down, that's when the market will start pricing a totally different environment. One where liquidity actually flows. This is why Bitcoin looks stuck right now. The macro setup says go, but the dollar says not yet. And part of that hesitation, comes from the government shutdown. It's holding back a massive amount of treasury cash that hasn't re-entered the system yet. Once the shutdown ends and that spending kicks in, the market will start to feel it. If that happens while the dollar is rolling over, liquidity returns in a wave and the market will reprice everything at once, Bitcoin included. So everything that we've talked about so far in today's video comes down to one question, and that is, where is liquidity actually going? 10x Research says it's already flowing under the surface. It's not visible to the everyday person. It's visible on chain, which is once again why we love blockchain and the whole Web3 crypto world. On-chain data shows long-term holders are slowly distributing, while new institutional demand is absorbing that supply almost one for one. That's why price looked so flat and choppy. The market is balanced. Old coins moving out, new money moving in, but the handoff is nearly complete. They describe it as a fragile equilibrium that rarely lasts. When one side steps back, the imbalance triggers the next decisive move. 10x calls this setup the ice wall cracking. It looks stable from the outside, but inside the system, things are shifting fast. And yes, there are headwinds. The government shutdown is still holding back spending. The dollar looks like it could push higher before it cools off. And the data shows whales are still distributing while institutions slowly take the other side. All of that creates noise in the short term. Choppy moves, fake breakouts, quick pullbacks. But the ultimate decider isn't sentiment or even positioning, it's liquidity. And that's the flip we've been talking about all along. Not a price pattern, a liquidity shift. And we already know which way the Fed is heading on that forefront. They're done draining the system. QT ends December 1st. From that moment on, the Fed's balance sheet stops shrinking and starts stabilizing. That's the signal every major cycle has waited for, the point where money creation turns back on. So that doesn't mean we can't move higher before December 1st, if that's what you're thinking. Markets are forward-looking, and we know November leading into December are historically bullish during bull years. But right now, these signals, the dollar, the shutdown, which hopefully will be over soon, and the Fed's direction are your roadmap. You shouldn't be over leveraged anyway. This is not the channel for you if that's what you do, unless you come here for macro news. I'm a fundamentalist, and I know and I believe that Bitcoin is going to be worth $1 million or more in the near future. And that's all that matters right now, reinforced by the mass adoption we see daily. This is the journey part of getting there. So once the liquidity starts flowing again, the market stops trading on fear and starts trading on supply. And there's only so much Bitcoin to go around. Remember, that's why it's going to be worth over $1 million someday. This is also what 10x research has been warning about, the ice wall breaking from the inside. It can start slow, it can fake people out, but once it gives, the whole market shifts at once. That's the flip. And the countdown has already started. So here is what matters right now as we wrap up today's video. Bitcoin moves when liquidity turns on. The system still needs that switch to flip. And once the government reopens and the Fed ends quantitative tightening on December 1st, that process begins. Those two moments are what release the next wave of capital into the market. So watch the dollar and the next treasury updates, as we'll be following here at my channel closely, which is why I ask you to like and subscribe to my channel if you haven't already, because when they start to shift, liquidity follows. And when liquidity moves, Bitcoin moves with it, and the window is getting close. That's it for today, guys. I love you so much. I loved all your comments and hearing where everyone is from. Take care, and I will see you guys here tomorrow.